Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Right now, commodity prices, they are surging. So we've seen everything from the metals to the energies to agriculture notching up explosive gains, and currently there are two major trading plays dominating the commodity markets. The first is the short-term macro-driven volatility play, which has continued to deliver an endless flow of opportunities to capitalize on the week-to-week volatility. And then there's the most lucrative yet least talked about, that is the super cycle. So right now, the super cycle, that is whipping up an inflationary storm, which is really sending a number of commodities ranging from the industrial metals to energies to agriculture skyrocketing to multi-year highs. A new price surge is firmly underway, with aluminium, copper, nickel, uranium, zinc prices continuing to hit record highs. Last week, aluminium prices, they rose to their highest in 13 years. Nickel prices hit 7-year highs. Uranium prices surged to 6-year high. Uranium is now up over 216% from a year ago. Elsewhere, natural gas prices, they've hit 7-year highs, rallying over 240% from its 2020 low. Sugar prices, they've hit 4-year highs. Coffee prices, they've posted their biggest monthly gain since 2014. Soybean prices have surpassed all-time record highs, and crude oil prices, they're currently up 265% from their 2020 lows, crude oil being the best performing commodity in the last year. Commodities are once again starting to attract a lot of attention. This is on a scale not seen since the global financial crisis in 2008, as a new super cycle firmly gathers pace. As you know, volatility creates opportunity. Banks, hedge funds, money managers, they are making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, have already made in excess of 6 and 7 figures so far this year, and we still have another 4 months left to go. So if you've been kicking yourself for missing out on some of the biggest trading events so far this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. First of all, let's move over to copper. So copper had an explosive move on Friday, up 3.4% on the day. As you know, we've talked to you through copper a number of times on the week ahead commodity report. We have built into 5 positions on this market. We took the opportunity on Friday's breakouts to bank into strength. So we locked in over 1,500 points profit on copper. So for every 1 lot contract that you will be trading, that's $15,000 of profit. For every 10 lot contract that you'll be trading, that's $150,000 of profit. In the last week, hedge funds and money managers, they increased their overall net long position on copper by 11%. And we subsequently saw that move later on in the week over Thursday, but particularly on Friday, the breakout to the upside, which is very common within the cycles for copper as you go into the middle of September to outperform other metals. That played out extremely well within the data, the cycles that we've been looking at on this market. Now, I will draw your attention to a couple of other markets which you definitely want to have on the radar as we go into next week, because this also played out to expectations. So you remember last week we talked you through what our expectation would be, that gold prices, they would break out after non-farm payroll data. We would sit in a range of 1800 to 1830. We would see that 1830 level tested later on in the week. We saw that after non-farm payroll. That would lure in a lot of traders to buy too high, to FOMO in, especially traders that don't know about the usual sell-offs that you get after a Labor Day public holiday in the USA, and also after the European Central Bank announcement as well. So last week, from the highs to the lows here, gold sold off over 500 points there, and many of you have reached out that our analysis there helped you massively to stay on the right side of the trade and not get caught FOMOing in at the top, like so many traders out there utilizing technical confirmations where they get these delayed confirmations. They end up buying too high, they keep FOMOing in, and ultimately they get liquidated when you see this sort of magnitude of a sell-off. It was exactly the same as well on Friday. Yet again, a post-European Central Bank sell-off for both gold, silver, platinum. After the European Central Bank announcement on the Friday, you see pressure into the US session on precious metals, and that played out again. So just note that everything that we discussed with you the previous week played out. Our expectation was going into the Labor Day public holiday, you would see a risk-off environment, the dollar would perform well, this would put pressure on metals such as gold, silver, platinum, and that all played out perfectly. So now, as we go into next week, as you would imagine, we positioned ourselves with dollar long positions here. Month of September, you have quad witching, which is going to be next week. Alongside that, you have the end of quarter profit taking, and we have an FOMC statement. All of these news items do tend to create risk of events which can provide further upside to the dollar and essentially short-term pressure on the metals. So we talked you through that in detail previously to expect this pressure to the downside over September, that September is not a great month for gold, silver, platinum. However, it sets up for great opportunities as you go into October and the final quarter as well. So where we're poised right now with these metals, it wouldn't be a surprise to see a little bit more weakness here as we go into next week. So again, with gold, with silver, and also platinum, we may get more downside pressure as you go into next week if we do see the dollar pick up that momentum. So if you have a look at silver here, again, the previous week, we mentioned to you, we banked 350 points profit after the non-farm payroll data. That ended up being within 15 points of the high where we banked our trade on silver. Subsequently, silver has come back under pressure. It's essentially given back the move that it had after non-farm payrolls where it surged 4%. We've now seen that pullback, and now we're back down towards $23.68 per ounce. So again, expectation is going into next week, we could see more range bound to downside price action on gold, silver, and platinum, but ultimately this sets up for great opportunities as you move into October. The cycles are different here at this time of year for copper. It tends to be a strong performer. That's also the same with oil too. So oil typically going into next week does pick up momentum. I would watch out for a potential breakout on oil back above $70 per barrel, taking out the swing highs here as well. I would look for that momentum to continue with crude oil going into next week, where copper would also benefit as a result. I am expecting dollar strength too. Now going over to platinum, I'm also looking for more range bound price action to weakness going into next week until we get towards the end of September on this market. Then typically once the low is in, that can provide some really favorable opportunities as we go into the last quarter. So I'll definitely just be mindful of that going into next week. If you're looking to catch the lows here on the sell-off, just be mindful that normally gold, silver, platinum, they're under more pressure throughout the month of September, especially as you see more end of quarter profit taking, quad witching, and also the FOMC statement. I like the dollar here overall for more upside over this month, but this can set up really nicely for buy opportunities as we go into the final quarter for many commodities and also go into next week. I like crude oil and copper here as well. As a side note, hedge funds and money managers, of those that do have a position on crude oil, 80% are long this market. As you know, bull markets, they don't move up in a straight line, they zigzag. That presents savvy traders with back-to-back trading opportunities. One of the biggest obstacles that holds many retail traders back from achieving their desired success, it's not having access to data, market intelligence to make confident decisions with accuracy in these highly lucrative markets. If you follow the wrong strategy, or worse still, if you lack access to the right data at the right time, you will end up wasting a lot of time, money, and effort, have no results to show for all of your hard work. If you want to thrive and not just survive in these highly macro-driven markets, you need to adapt and utilize a professional, research-driven approach. Trading like every other misguided retail trader using outdated technical analysis and gimmicky technical indicators, it will not work. The greater your data and intelligence, the greater your edge in navigating these fast-moving markets with superior levels of precision, confidence, and profitability. We still have another 4 months to go this year. Time is the most valuable commodity you have, and make sure you don't waste it. If you want to maximize your money-making potential and thrive, not just survive, in these fast-moving markets, then you need to adapt your strategy to the current market conditions and trade like the hedge funds, money managers, banks, institutions, utilizing a professional, research-driven approach. This is where you'll be utilizing data, market intelligence, statistics in the markets, the facts. Alongside that, learning the daily, the weekly, the quarterly, the monthly cycles that impact each individual commodity. Marry that up to the intermarket correlations, the ratios in the market, key areas of liquidity, understand too macroeconomics fundamentals, the key events that will be the biggest drivers for explosive moves in the commodity markets, creating impulse moves where a lot of gains are generated very fast. Alongside that, understand capital flows in the market, and of course learn how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.